Alright, hi guys, welcome back to PKFX YouTube trading channel. So this is a quick update on two of the trades that I was holding, out of which one already hit the take profit level and the other one is currently in profits as well. So this is the USDCAD trade that we were previously discussing, where I mentioned that this particular trade, when I first entered this trade, the market literally went all the way up here and wicked me out from that position. The reason when I entered this trade was the shift of structure that I got for the 30 minutes candlestick, which confirmed to me that, hey, the trend is now changing from a buy into a sell. And upon the candle closure over here, I entered this trade, but unfortunately the market did reverse back up again into a buy. So you can see for the 30 minutes candlestick, or the lower the time frames, usually the change from buy to sell can be more immediate or more frequent compared to when you're looking at a higher time frame. Let's say a 1 hour candlestick or a 2 hour candlestick or a 4 hour candlestick. The higher the time frame, the more accurate the signals that you're getting. But this is an entry signal, and for entry signals usually I look at 2 hours, 1 hours, 30 minutes, and 30 minutes being the lowest. Very rarely I go down to 15 minutes. So for me, this was a sufficient entry signal. However, the market did wick me off, and because this was a week out and then the market headed back down again into the sell, so for me it was literally just liquidity grab. This for me is indeed was a liquidity grab, right? So that confirmed to me further that, hey, the direction is still right, your analysis is still right, you can still enter upon a pullback. And when I got the pullback and an engulfing candle thereafter, when this engulfing candle closed over here, I entered back the trade. Slightly lesser from the previous trade opportunity that I got. So this was a clear 1 to 2. This trade was more of a 1 to 1.8. But I still decided to take this particular trade regardless of the area that I'm entering, because the strategy didn't change. The confluences that I had that is in favor of my direction, that didn't change. My analysis didn't change. The only difference was I entered and I got liquidity grab, and then pretty much it closed it below the round psychological number as well. So everything was still intact. So I went ahead and I entered this trade, and eventually this trade played out. I knew that this trade was about to play out when the market actually closed somewhere here. At that point of time, if I move on to the 1 minute candlestick, and we can see that the market clearly already showing the direction that it's headed to, right? So I decided to continue to hold. There was a point of time where the 4 hour candle, if I go to the 4 hour candle, it was literally making like a doji over here. So at this point of time, I was a bit worried, to be honest. This particular candle, that was an indecision candle, when it closed back up over here, I was still worried whether the trade is going to play off to my direction. But the very next candle that started printing red, that was a confirmation that, hey, the direction is going to go down, no worries there. So I decided to continue to hold this particular trade until it TP'd. Now, could I hold this trade further? Maybe, but the reason I decided to close at a 1 to 2 was because the trade was coming into the next support area, and initially my plan was to take profit over here. So the profit was hit. So I think the best thing to do over here is to not be greedy and be happy that the market has already given what I wanted. As you can see, the weekly trend is a buy, the daily and the 4 hour trend is a sell. So even though the daily and the 4 hour is a sell, overall this is still considered as a counter trend trade. Therefore, I secured the profit over here. And now if I zoom out on a daily candlestick, I can see that this trade has already played out in a very beautiful way, and the market is now closing over here, and the last daily candle opened and closed over here as well. So I could see some sort of a resistance. Now, can the market continue to dump down? Maybe, but now the market is already here at the weekly support area, and the right thing to do is to now go pro trend trade instead of counter trend trade, because the market already reached to my weekly area where ideally it should act as a support. Because previously, if I go back over here, whenever the market comes over here, it had a bounce. Whenever the market come over here, it had a bounce. Whenever the market comes over here, it had a bounce. So all I need to do is look to the left, how the market reacted before that, and I could see that the market has come over here, I'm expecting a bounce. Like there can be instances where the market goes further down before the bounce, the market goes further down before the bounce, the market goes further down before the bounce. So can somewhat similar thing play out? Yeah, but eventually, like 6 times when this happened before, it is all saying to me the market is going to bounce. So therefore, I felt like the good thing or the right thing to do is to close out the trade. If the market goes below, well, it's okay. We already secured the profit. This was never my trade. And if I start seeing indication that the market is bouncing, the right thing to do is to enter for a buy trade. And this time around, it's a pro trend trade instead of a counter trend trade, right? So that will be for next week, right? So USDCAD, I've updated the journal accordingly. As you can see, the previous trade was a week out, so I marked it as a loss. And then the next trade, when I entered, it was a win. So I've updated the journal accordingly, and I mentioned that I was calm. I risked only 0.5%. The market wicked out due to the Canadian news and the potential FOMC Jerome Powell, his final speech. So there was a lot of volatility going on over there. So the 30 minutes did shift back the structure back again from a sell into a buy. And then when I was entering this trade, it shifted back again into a sell. So I pretty much saw the same opportunity again, and I re-entered. When I re-entered, I still documented what could possibly go wrong, right? So I mentioned the market can wick me out again, and if yes, it's 3 losses back to back because I already had 2 losses. So at that point of time, if this trade itself was a loss, that would have been 3 losses back to back, right? So what I said is, if it's going to be 3 losses back to back, right, I will step out of the market for the week and not trade at all to reset my mind, right? Go out, walk out, touch grass, do whatever you want, but reset your mental strength before you come back again, and in a neutral manner. So the results, this trade ended up hitting the take profit, and I closed out to secure approximately 1 to 2 risk to reward as it reached my weekly area of interest, where I expect the market to act as a support and it can reverse back again. So I'm journaling every single thing that I see in the market so that I can learn the most out of each and every trade. Let it be a winning trade or even a losing trade, I'm recording pretty much everything, right? And then next, the AUDJPY trade that ended up as a loss because of the sudden dump of all the JPY pairs. So if I were to go to that trade now, if I go to AUDJPY, so this was the trade that when I entered, it suddenly just, let me go to the 1 hour candlesticks or the 30 minutes candlesticks. All right. So this was the trade when I entered, the market was pretty much showing that it was going in my direction before it had a massive dump. And the massive dump, initially I thought I was only wicked out, right? So I was kind of not so happy that 2 trades that I entered was a back-to-back week out, but turned out that it was not a week out. The market eventually dumped further down. And then if I go to the daily candlesticks over here, this is when I noticed that something severe was happening for the JPY pairs. Throughout all JPY pairs, everything was dumping, right? So that's when I saw this dump, it was already dumping somewhere down here, right? If I go all the way down here, it was, sorry, 1 second, let me just arrange this. Okay, now if I were to pull back my measuring tool, you could see that it was somewhere around here where the market was pretty much dumping significantly. So I was looking at this and I said, when was the last time the market had such a big move, right? So what I did, I took a step back and I saw, okay, the daily candles, right? The daily EMA is coming up here as a support. Obviously, this daily area that I was interested in completely broke down, and it's heading towards the next daily area of interest where I see good amount of structure points to act as a support. It's coming over here. And I also asked myself, when was the last time from the peak over here all the way down here reaching the daily EMA, when was the last time the market had a 280 pips move in like a single day? So I said, this is extreme at this point of time. This is very rare. I didn't want to enter immediately because I don't want to catch a falling knife. But what I said is, you know what, let's make it as a strategic entry. So my entry point, I checked over here, this daily support area over here had a round psychological number of 111.500, and I saw the daily EMA coming in as a support as well. So I said, this is probably going to be a sharp wick out, because of some market news that happened, and obviously Japanese yen, all JPY pairs had this kind of big volatility because of the news. So I set a buy limit right over here, right? Technically, it was not based on the confluences. That's why I calculated the confluences and I marked it right over here. It was only meeting 40% of my personal strategy that I was interested in accumulating this data. All this data had good percentages, but this one was not. For me, it was not a A plus or a A or a B or a C a grade setup. For me, this is pretty much a D grade setup kind of stuff. So I marked this as red, but I also understood the reason why I would like to enter this particular trade was because of the market position at that point of time, and I was trying to capitalize that sudden news, right? I was not following the news, but the candlestick showed me that something severe was happening. So I didn't risk much. The same amount that I risked up here, I risked the same amount down here with 65 pips stop loss. And I told myself that if it's going to weak out me below, I'm cool, I'm fine. I took the loss and I'm done for the week, right? So what happened was the market came down all the way down here and it wicked me out almost exactly to the T over here, holding this daily support zone over here. If I really zoom in, we can see that the week out went slightly below there as well, right? In fact, if I go to, let's say, the 2-hour candlestick, you can see clearly the weak pattern over here, right? So it was if I go to the 30 minutes candlesticks, maybe we can see it even better. Yeah, this was literally a sharp wick out. So I would say I was pretty much lucky that this entry point was set over here, the market triggered and immediately started running on profits, right? So if I were to zoom out now back to the 4-hour candlestick pattern, this is the current scenario right now, and I believe this is like a pretty much like a jackpot trade. I don't want to say that this is going to end up being a successful trade yet because the market is closed right now, but technically this market right now is already at a 1 to 2.5 risk to reward in profits, and it's going well, and the swap for AUDJPY buy is positive. Therefore, I decided to continue to hold this trade. Now, a few things can happen, and I'm well aware. One, the overnight weekend gap could literally just open down here and stop me out, like what it has happened previously in one of the trades. If that doesn't happen, if the market opens normally, the market can always come back down because now the 4-hour has already turned into a sell. The daily has already turned into a sell as well. So even though this is a pro-trend trade for the weekly, which is a buy, but for the daily and 4-hour, which is the immediate time frames, this is a sell. So market can always continue to make this pattern where it is making lower low, lower high, and eventually lower low. So because I saw that right before the market closed, I decided to secure a reasonable amount of profits, not too much, but I just closed it off slightly above break even to be on profits in case the market comes back down and close me off, so that this trade will end up being in profits as well, right? To cover whatever fees and so on, right? But to be very fair, what I'm expecting is initially I wanted to trade from here all the way up here. So I'm expecting the market to continue its movement upwards, probably have quite a bit of resistance over here, but eventually break out and then retest this area and continue the trend upwards. Now, is it worth it? Is it really worth holding all the way there? Probably not. I wouldn't know, right? But what I would do in this scenario, if the market did move up above this area and start breaking above, I will start trailing my stop loss to be a bit higher to secure more and more profits. So really got to see if this particular trade is going to stop me out the moment it opens on Sunday night, Monday, or it's going to end up being that particular jackpot trade. So that's about it, guys. USDCAD, I secured the profits, 1 to 2 risk to reward. It was a beautiful trade. AUDJPY may just end up being the jackpot trade. And that's about it, guys. All right. Thank you so much. Have a good day.